Okay, good morning, everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, March 27th. Michael Boutros here with you this morning. Peter, Jaya, good morning to you, sir. Dagan, great to see you. Iman, Peter, Pete, Ruth, Steve, Tom, great to see everyone in the room. So some weird, interesting price action to say the least. So I was looking for a little bit of a bounce in the dollar. Didn't expect it to get quite this this aggressive. So we do have to kind of sit back and kind of really take note of the next couple of hours, specifically how the U.S. market opens. You saw that the dollar really topping that 50 level that we were looking for as resistance. You're seeing that it's pushing higher today. So on the menu, the 89.50 level is what I'm looking at. On the menu for today, we'll go over obviously DXY and the implications of what that means for Euro. So Euro, same thing. It was probing through the monthly opening range highs last night. We were talking about that. I was looking to get back in long on another pullback, but again, we just plowed through the weekly open. So need to start to rethink some of these setups here, but we'll have to take a look at them one by one. Aussie yen will be on the menu today. Gold has been extravagant, really nice rally to a huge region of resistance. We talked about that last night. We're getting that pullback now. And pound CAD. You know, I even noted last night that there wasn't a very clean near-term setup, but it was right on point, guys. That was the major resistance level. We've turned pretty sharply lower. So dollar CAD, we'll take a look at what that's doing as well. And dollar yen, nice rebound here. Was looking for a hold of resistance, same gig. It's pushing through its near-term resistance as well. So some tricky price to get started for the week, to say the least, but lots of opportunity on hand. So guys, as usual, any questions, trade setups you'd like to review, feel free to throw them on the message board at any time. Dagan, I do apologize. I didn't get back to your email that you sent over the weekend. With regards to your question on the candle closes. So the 5 p.m. New York close, Dagan, just to answer your question pretty bluntly, is kind of the industry standard, okay? U.S. market close is the final major market close or equity market close across the globe. So the reason that these closes tend to be significant is because that's where there is consensus. So on a day where you get a major high in price or you get a major low in price or there's a huge spike in volatility, where the market consensus close is on that day tends to be significant. Dagan says he's losing sound. Guys, anyone having any other issues with sound? Okay, Thomas Puja says it's okay. 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 Thanks. Thank you, Iman, Peter, Jaya, thank you. So, Dagan, does that sort of answer your question as far as the market closes? So if you're using a different feed or your broker is using a different market close on their charts, that's okay. Let me just take a step back. Again, that's what me and Jamie are here for. Okay, so even if your chart necessarily isn't highlighting that close, that's why we note the levels for you every night, and just make sure you add them to your chart. Okay, it's not the end of the world. It's not disaster, but certainly these closes, and you've seen it time and time again in our research, guys. It happens. The markets will tend to find some sort of inflection point on those major closes. Okay. So I hope that puts that one to bed. SPX, Pete, yes, we will look at the SPX. Let me write that down, 100%. So I've been following that one. We talked about it yesterday in the webinar, if you were with me. At the point that it's at a key support level, like this was it. If the SPX broke this last level, guys, let's just go to it real quick. If the SPX broke this last level, you're looking at like 25.30 as a soft target, but really 25.90 would be the first level of interest for me. Huge region. And obviously, if we take this back to the weekly charts, we looked at this yesterday as well, sliding parallel for the same slope that we've been following off that late 2015, early 2016 lows. Okay, that red sliding parallel, same slope, perfect touch, 618 extension off the high. So, a very significant area of support, guys. We were talking about momentum. If the momentum signature were to fail sub 40, that would be the first time that we've seen that since 2016. Again, here we're getting a little bit of a turn. So we're not out of the woods yet on the SPX. Who was this for? Pete, but He says missed yesterday. It looked like a double bottom. On what time frame are you looking at, Pete? So the major, let's start with the SPX since we're here. Okay, this will be number one. Look, with the risk markets, the drop off that we had, remember we were looking at a consolidation feature here. The drop off was right here, this break back below the monthly open. Okay, the major two levels of support that we were looking at for 26.17, that's the yearly low day close, and 25.86. Those are the two levels that we were looking for possible exhaustion, possible turn. So you probe just below. Obviously, you got the 200 day moving average here. You have the 618 extension off the high. Again, that slope, okay, that we're looking at here. I don't have it on the daily chart, but converges right in that region. So a huge spot, right? So the fact that we're getting, we got a pretty sizable reversal candle yesterday, taking us well back above the swing lows. If you're talking about a double bottom on something like this, that's, a kind of a stretch in my opinion, Pete. But even on the near term, look at this. This is the chart we've been following. Really clean formation. So there's a couple of different pitchforks at hand here. It's going to kind of zoom out, give you the bigger picture. There's a basic objective, regular pitchfork right off the highs from the high, low, high that you made for the February high, March low, March high. Get a median line, the 50 line here, really nice support. Break, you saw acceleration. There was the median line. Just lower was this spot. Okay, this is a 618 extension, also at 200 day moving average. We just looked at on the daily chart. Really strong reversal there. So for the SPX, I don't think you're out of the woods until you're through 26.92. That's just an objective pivot in price. You also have the upper median line parallel, basic trend line resistance, and there is a modified pitchfork here off the highs, Pete. Okay, boom, boom, boom. This is a shift, modified shift formation. So it's just changes the pitch for you. That had the median line right there as support. Again, you see a little bit of an inflection on both sides of it, but that 50 line in blue also converges on that upper parallel. So everything kind of lines up right into 26.90, basically just below 27. So I don't think you're out of the woods yet. That's what I think, from an objective slope standpoint, that's what you'd need to shift it a little bit more for an aggressive stance towards 27.40s, 27.44, if not higher. But this for me is like sort of the line in the sand for the near term bearish move. So we are not out of the woods yet. Let me just see what this looks like real quick. Okay. Watch 26.90, 26.92. Pete, does that help? Did you have any specific questions on the SPX? So we were getting this, and this is another thing that we highlighted yesterday. This momentum basic trigger. There was actually a test and a pull off late yesterday before the close, before obviously the breach and rip higher here. So, yeah, I think you can get a little bit higher, but 27 is kind of the line in the sand that you'd need to really dissuade further downside. And honestly, the only, keep this, Pete, in mind. This is really critical. I think this is the only chart that you need to really focus on. If you've had this weekly chart for SPX, you basically caught all the turns for the year. So this is big, big, big support. Like I said, if we were to break below this, there's a long way down. Okay. He says, yes, thanks. Perfect. Thank you. Hey, Pete, thank you, man. Appreciate that. So a little bit out of order today, but there's the SPX. I think it is at a big play this early in the week, and the reaction that you're getting warrants attention. So watch 27 as resistance there. DXY. So, man, I'm starting to get a little thrown off here. I think it warrants us being a little bit more cautious. I'm not buying this, that this was it. Reversal. We're going to rip higher. I think this is kind of a washout trade, guys. Just my humble opinion. But we don't have quite the clarity that we need on that yet. So DXY, really quick, on the weekly charts, we've been following this. The focus region, 88.71, 88.18. Those are the two levels that we're looking for a move lower in the DXY. Momentum remains below that longer term resistance trigger dating back to the 2017 highs. And 91.33 at the end of the day, 88.71, that's still the range that you're looking for on the break of the index. Obviously, our favorite move is to see it drop into this support level first. But we'll have to see. We'll have to see as this fizzles out. We're not really getting much economic data until later in the week. Okay, we get GDP figures for the United States, and even Canada gets a GDP print later this week as well. So we're going to have to just pay attention to price action. But the weekly chart kind of has us in no man's land again. We're mid-range, so there's not really nothing compelling to scream at here. Just wanted to highlight again those major key support and resistance levels on the longer term. Daily chart. Well, what do you want to do with this? We highlighted this last night, and here's what it looked like. The fact that we were basically coming into a nice little support region right here. We had 88.90 into 89.08. Okay, this is a 100% extension. So if this is just correction, a level you'd want to inherently just pay attention to. And then you have the yearly low day close, a good inflection point of which you start to look for some sort of pivot in price. And to go back to your question, Digon, on the closes, this is a perfect example. Okay. Essentially a close below this region would really invalidate or would really validate, I should say, more of a aggressive downside bias. So this is the first area you'd start to look for support on a pullback, and here it is. Now, what's concerning for me is that obviously we got bearish with this reversal here. There was a nice momentum trigger break we've been watching for months. Beautiful. The near-term prospect also got us a break of this near-term consolidation that we were in. Beautiful. But here's the market with an outside day reversal off the lows if things close where we are today. Okay, so we have to, if things start to not go with our broader outlook or our expectation, we have to adjust. So yeah, I'd start to get concerned if we start to close northbound of 89.77 is the next target. 89.49, 89.50 is where I was looking for a more concrete hold in price. Here's what it looks like now. Right? So what do you do with this? We haven't gotten a 2-hour close above. We did get a 60-minute close above. So this is also the objective weekly opening range highs. So if we are going to max that out, you'd want to see acceleration here. So the U.S. Open is going to be important, guys. If we slip back below 89.50 and we start to trend lower, cool. I'd be working with that as the opening range high for the week. We obviously got the clear opening range low. But, if this thing continues to push higher, you could see 89.77. You could see the upper parallel before it turns around again. A little bit more bigger of a rally than I wanted to see. And again, if we close at these levels, an outside day reversal off the lows, we can't ignore that. If that does materialize on today's close, I think we have to look for the dollar to get us a little bit more of a recovery here before we move lower. Digon, Mike, could you help me understand how to get into this trade? Many thanks. Digon, on which pair? On the DXY itself. So for the DXY, some of you who are, excuse me, catching a little tickle in my throat. Sorry about that, guys. If you were with us yesterday and we were talking about that possibility for the divergence and the concern there, and you're holding longs, this is where you want to take a little off the table, my humble opinion. A little bit of a move higher, I'd close the rest there, but stop should be at break even. If you're looking for fresh entries, Digon, the longer term, Iman, thank you, God bless you as well. The longer term move or the basic scenario is we're still looking for that final drop, right? So for me, Digon, I'm going to be looking, if we do stretch higher for the 50 line, we saw a decent pivot there, nothing major, okay? In fact, let me just see what this looks like. The 38.2 actually looks even a little bit cleaner than the 50, okay? Really nice support pivot, break saw acceleration, instant resistance on the retest. This would be a region I'd start to look for exhaustion. So Digon, heading into the U.S. trade session, if this starts to trend higher, you look for inflection and momentum, you look for divergence, some sort of trigger. Once it pulls back, you look for the retest to short against that high, and you look for the move lower. If this holds and you just move from here, you need to see some sort of rebound or retest to get a short against that high. Okay, we just don't have any type of trigger right now to do that. Momentum could just blast through 70, and if it does here, you're going to see that 89, 77 level. So we'll have to see how the U.S. markets open. Remember, timing these trades, Dagon, is important as well. We don't want to just jump into a trade. Some rules of thumb: you always want to get into a position towards the latter part of the hour, towards the earlier part of the hour. These are just from a probability standpoint best for you, because you also get hourly opening ranges and such. So the markets will tend to extend into the close of these hours, and early and late in the session. So right after the market opens, you get that hourly opening range. You look for a break of that range to help you give a bias for the remainder of the day. So Dagon, I encourage you to go through some of the material that we have on SB on the resource page. Seems like you have some basic questions. See if that helps, but I hope that offers some clarity on it. For this specific move here, we just broke the weekly opening range highs. The broader trend is lower, but the possibility for recovery is still there. So on this rally, you'd be looking for it to fade, which means you're going to go the opposite direction once it gets into a major resistance. That's how I would look to play the DXY. And we'll look at some other setups, Dagon, but let me know if that helps. So that's DXY from yesterday. Okay, we're probing into the bearish invalidation level for the near-term play. So I want us to be a little bit more cautious here. See what happens. If it continues higher, 89.77, the upper parallel is where we look for an exhaustion. But this was my line in the sand. So if the U.S. market opens and DXY holds northbound of 89.50, we have to sit on the sidelines. Yeah, Dagon, I got you. No worries. He says learning curve for me is translating the terms you use for entry, exit, and stop, etc. Yeah, you got it. And you're in the right place. So just let me know if you have any questions, okay? You're more than welcome, sir. All right, so that's DXY. Euro looks like this. And the same type of deal. This one was a little bit clearer in that you were basically at resistance last night. One thing I do want to note, guys, and just looking at this kind of objectively now, between the two setups that we were noting last night, the DXY, obviously we always talk about the fact that this is so super heavily weighted the euro, right? 60% of the DXY is euro dollar. You saw that discrepancy in that the DXY broke the monthly opening range lows with some conviction. It actually got the break in the run, okay? Euro dollar was struggling to break above the weekly opening range highs, okay? And like I said, you could get some kickback from here, but you'd look for resistance along the median line. More importantly, down here at support near 2350s, okay, is kind of like where you want to see a little bit more of a stringent support hold. And this is the monthly opening range high. So this was struggling to break the monthly opening range high. DXY ripped below its monthly opening range high. That divergence, my friends, can also sometimes really be something that's highlights, marks near-term shifts in trend or near-term pullbacks, or sometimes just major swing highs and lows. So the fact that we saw that discrepancy yesterday had me a little concerned. Euro, more so than the dollar, was at a more objective resistance range, right? This is the 618 line of the formation that we added on last week. 764 retracement gave you 2461. The high was 2462 yesterday, before this thing started to ease off a little bit. A support trigger here in momentum also kind of highlighted the risk if we saw a downside break. But again, on that break, I want to see support here. I want to see us hold above the weekly opening range lows to continue favoring the upside in euro. Here's what we look like now. We're testing that first level support at the median line. I still want to see this hold if we're going to have further legs on the upside for this stretch. Okay, so not all is lost on the euro dollar yet. DXY, I'm really confused with this break above 89.50. I don't want to really touch that until I get a little bit more clarity there. Euro dollar, again, not out just yet. Look for support ahead of the weekly open. Okay, is right here. The weekly opening range low is right here. And again, the 50% retracement from that downside move of the February highs. Huge pivot in price, has been for the last couple of months. Resistance, 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 break, acceleration, support. Same spot. Also, one other thing I want to mark, or I want to keep in mind on this pullback, is on this momentum signature, a market shift in behavior coming from oversold conditions, a bearish momentum profile. You saw a spike through 60, but broadly 60 held as resistance, right? We move lower, sub 40 keeps the downside still in play. Here's your first above 60 pop. Ever since that, every pullback has found support ahead of 40. Same thing here. We broke into overbought territory. If support holds ahead of 40 in momentum, that would further suggest that the momentum profile has shifted to the bulls, and you'd look to buy pullback still. Would you go long at the 50% on euro dollar? Again, Dagon, my type of strategy is very different in that I need to be watching what price action is doing. If you're talking about more of a swing trade strategy like Jamie, then yeah, you'd want to sort of look for where your stop would be on a move into 2350. Where's your stop? Where's your stop? You're gonna get long there. Then where are you gonna put your stop? You're gonna put it below 2240. You're gonna put 110 pip stop on that for a swing trade, a longer term position trade. That might work. But for me as an intraday trader or someone more near term, I have to see price action do something, Dagon. You get into the 10-minute, the 30-minute chart. I want to see a low, a rip higher, and a pullback lower for a higher low, something I could put a stop against to try to play the play near term. Okay, we have to keep in mind what our time frames are. So it really depends on what you're trying to do, what type of strategy you're trying to implement. But for me, that's where I'd start to look for support. Yeah, I'd want to see an inflection point. I'm not going to just put a blind entry there. And then if you get that low to trade against, now we have a tradable stop, right? Sure, if you had the right PA. I'm not sure what you mean by PA. Okay. Right price action. Sorry. Okay. Yeah, exactly. You got to watch the near-term price action, real near-term, to get the entries. But we highlight the major key levels that we're looking at. So you're absolutely right. 2355, 2350, that zone is where I'm looking for support. So we'll see if the euro can't hold up its side of the bargain here, because DXY certainly is risking a big play with that outside reversal. By the way, you do have some commentary on the wires today. Raphael Bostic is going to be on from the Fed with some commentary. Here's some further commentary that you're going to get later this week. BOE has a couple of guys on tap, as long as the Fed is as well as the Fed. We got some research from Prattle earlier in the week. There's not really much that is in here I think really matters to us per se, but just with regards to the Fed speakers, the note says as follows: the speakers are likely to sound somewhat more hawkish and echo the rate hike. As expected, Fed policymakers hiked rates 25 basis points last week and signaled that the central tendency of the committee continues to indicate 3 hikes in 2018. But 4 hikes is increasingly possible. This week, 4 Fed policymakers are slated to speak. Dudley is likely to be the biggest market mover due to both his standings as New York Fed president, which, by the way, guys, is a permanent member of the voting bloc, and the fact that he is most moderate of of this week's speakers. In fact, the 3 policymakers speaking also have all skewed a bit hawkish lately, suggesting that the Fed's current model sentiment may rise toward hawkish this week. So could put a little bit more fuel on this rebound on the dollar. And Dudley already spoke yesterday. So we'll see if Bostic has anything interesting today. That being said, watch price action, guys. Pretty compelling stuff here. And one other thing I just wanted to note, now that you get a near-term stretch like this, it is prudent just to take a quick retracement of the last stretch. See if we get any confluence on the levels. Looks like this is the exact 38.2. And look where the 50 of the advance comes, in the same exact region right here. So 23.47, 23.55. Look at that whole zone if we break lower. Any questions on euro? Okay, that's number 2 and 3. Okay, also from last night's update is Aussie yen. So an unexpected reversal, but at a support level that we were watching. So here's Aussie yen. Okay, and I'm going to start off, I guess, with the weekly charts for Aussie yen because it is at a pretty, big juncture on where we broke. Remember this big support region we talked about, 81, 97 into 82. Basically, that whole region of resistance we were watching for quite some time. Last year's lows, pivot all through 2016. It is the 2015 swing low. So a huge region. Of inflection, right? A huge region of inflection. And there's the break. It's now resistance. And this is why I'm hesitant to do anything on the long side for Aussie yen. If we break back above this, guys, this is a clear divergence in weekly momentum. And yeah, I think it'd be worth playing a little bit of a recovery. But I can't get excited on anything on the long side while below this. So really mind the 82 region of resistance in Aussie yen. Here's what it looks like on the daily chart. Okay. Big old reversal candle yesterday, right off that 618 retracement. That's 80.56. Okay, that's the retracement from the advance off the lows that you made in 2016. And also that same slope, sliding parallel of the same pitchfork we've been following. One touch, two touch, converged right in that region as well. Again, the divergence that we were marking into the low here. So yeah, strong divergence into a low, big reversal day. Yeah, looks like you want to kind of play this to the long side, right? Off support. But again, the weekly chart has us on pause. What am I going to do? Buy right here into resistance? So, I always go back to the fact that, yeah, we might have an opinion on a trade. We might even have a strong inclination of what it's going to do. But if I don't have a game plan, if I don't have clear-cut risk management, okay, capital preservation is always paramount. What am I going to do here? I can't buy at resistance. I can't justify doing something like that. So look, if we break higher, look for the pullback into this region to get back on the long side, trying to play the rebound. But for me, this is a huge inflection in price. Period. End of conversation. Full stop. Okay. So Aussie yen, big inflection point. Intraday, well, this is what we threw on last night. Okay. And obviously, an objective break above that swing low, pivot in price, objective weekly opening range high, the median line, all that stuff, like I said, put us kind of constructive on the trade. But the weekly chart, again, highlighted that resistance. So couldn't get, excited about the long. Here's the pullback. As I said yesterday, look for, interim support right at the parallel or right at the median line, which is right here. Bullish invalidation's way down here. So even if we get the pullback, I wouldn't necessarily look to play the shorts per se while above 80.56. But a breach from here, I do think it's a nice topside play towards 82.46 and even 83. Just shy of 83, got both of those parallels, which offered some play, throughout this decline. So very clean formation. Here's the median line, resistance, 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 break, acceleration, resistance, pivot. Here's the breakthrough. If we test as resistance and the breakthrough this would be the 82 break. That would coincide with that resistance mark on the weekly charts. And then you'd play the recovery with a little bit more comfort, I should say. Okay, so Aussie yen, really precarious spot. Could be a decent turn here. Momentum turning ahead of 60. This is something I was looking at earlier today. Doesn't really clear the way for a larger momentum shift to the upside, but the day is young. Let's see how the U.S. markets pan out today. All things held constant. If this thing breaks lower, position right here, 80.90, the 81 handle will be a decent play with a stop against that low, trying to get that topside breach. But ultimately, you have to clear 82 to get that rally. So, a lot of these setups, guys, are pending, and that's okay. And that's okay. And certainly when you're playing these turns, it's pretty important. So any questions on Aussie yen? No change to any of these levels. You basically failed at 82, again, right ahead of that big pivot on the weekly chart that we were looking at. Always, guys, also a quick reminder, I do see some new names in here. On the intraday charts, the weekly and daily charts are always one click away. Okay, so I always put the update for you. If nothing major has shifted on the broader charts, I'll put the 120. But only one click away, you'll be able to see, the weekly and the daily chart. So you can always get that reference. Aussie Yen. Questions, comments, concerns? So if this advance has legs, could be limited to 81.50. So yeah, it's the first level you'd want to see hold as support. See if it does. That's number 4. Gold, number 5. So super clean. Came into a huge region. Wait, what was that? Did I just click on? Ooh, Swissy made a nice move here too, huh? Gold came to a huge region of resistance as well. And we're on pace right now to post an outside day reversal. Again, it's very early in the session, but just to take a quick top-down approach. Weekly chart for gold. Remember, the only thing you need to watch for is 1366, 1300. That's your world for gold since the start of the year. This is all that matters. Okay, so there's not really much to update here. Daily chart. Well, basic trendline resistance extending off the yearly high came in right here. Objective, simple, nothing fancy. You got that trigger break to the upside last week. We talked about this. Gave us a really strong upside bias. Momentum holding 40 on the downside here. Still puts the focus higher, but we're still within the confines of this basic slope. Resistance is resistance. Now, this is interesting here today. If this materializes into an outside daily reversal off the monthly high, it would be certainly risk here. So enter the intraday chart. Here's what it looks like. Okay, there's that basic trend line. And we even talked about this yesterday. There's the ongoing divergence in momentum, right? We've been marking momentum divergence ever since late last week. Price action pushed into a higher high, higher high. Series of lower highs, with these last two being a pretty strong signal. Remember, one of the reference points above 70 or above the extreme, whether it's 30 on the downside, 70 on the upside, the other one inside is typically a stronger signal. So there's the breakdown. Here's your weekly opening range low. Looks like we're giving out. This was the line in the sand. Remember, March opening range high, the 618 retracement. Okay, big level. Big level. Remember that slope I was talking about in the webinar yesterday, guys, how I didn't like that I cheated on that slope, but it was just so clean. Resistance, break, resistance, support, resistance, break. Look at that. Too clean. So now that we're moving back below the median line, certainly the risk is there for a larger pullback. An outside reversal off the highs is certainly something that is risky. But, is it worth a little bit more of a kickback? Sure. Would I want to be on the short side? No. If you miss the rally, I think you use this to get back on the long side with a move back towards this 50 line here. Okay, that'd be the ideal scenario. Ultimately, like I said, 1366 is still going to be, your objective range highs. That's the kind of level that you need to clear to really validate the resumption of the broader uptrend in gold. Recovery on the downside, sure. I think you see a little bit more of a correction play here. Ultimately, I think you want to buy that as close as you can towards that lower parallel. Ruth says, are you doing sterling? Yes, I am. It is up next on the menu. Actually, I was going to do sterling CAD, but sure, I'll do sterling too first. Someone else wanted to look at that. Michael, when I am in a near-term chart, 30 minutes or 15 minute, what is the period you use for the oscillator, please? Is it still 14 for the RSI signature? Yeah, most of the time I still keep it on 14. If stuff is really volatile, man, you might want to stretch into a 20 period RSI, but yeah, usually I'll keep those pretty constant because it's still going to give you a gauge of whatever the last time frame that you're looking at is. You don't want to get too granular and start shifting that too much. But the focus, guys, when you're looking at intraday price action, you're getting really deep into the 5 minute or the 30 minute, the focus should be more on what price is doing, more so than the oscillator. Absolutely, I'll look for divergence. Those triggers can help. They can be great. But your primary attention should be on what price action itself is doing. Okay, any questions on gold? So I do expect that you get a little bit lower, but ultimately, it's a pretty nice trade. And this is an objective break of the monthly opening range, excuse me. So we should be looking for that late month high. It's the 27th. Could this be it? Ultimately, you are still in the gold range, but first things first, I want to see if we hold above this support structure on the near term with this slope. Ruth says, I didn't know you had a webinar yesterday. So Ruth, I do a free webinar, on Daily FX on Monday mornings. You guys are always welcome to come to that for sure. Got to give the public a little bit of a tease every week to see, let them take a look at what we're doing in here. All right, so that is gold. Next up on tap, you know what? Let's do sterling first. Who else wants to take a look at pound? Someone was asking about that earlier in the session. Peter, right? You were looking at the pound as well, right? So look, sterling, whew, it was a big reversal. You guys know where me and Jamie stand. We both like the sterling long, generally speaking. It's notorious though, this thing. So this is going to be number 6. Here's what sterling looks like. First things first. You've all seen this chart a million times. I was looking for a stretch a little higher. It seems destined that this thing just absolutely screws as many people as possible. I've told you this a million times. Sterling is notoriously professionally traded market. You'll get a million throwovers, you'll get a million raise ceilings, turn right ahead of resistance right here on that stretch early in the year. Here again, we were looking for a tag again of that long-term 200-week moving average, didn't get it. And it looks a little tired on the upside for sure, but this thing is still in a broad constructive pattern. Even if sterling tanks to 36.75, it still keeps us within the realm of the broader uptrend. Just going to throw that out there. Okay, period. Sterling on the daily, well, it looks like we got a break of the initial monthly opening range early here on the 13th of the month. We couldn't close below that once we made that break. And it's late in the month. Here it is. Again today, this would constitute an outside day reversal. Is it? Where's the high? 42.45, 42.44. Okay, not quite an outside day reversal, 1 pip off, but certainly a big old reversal candle. If we push back below the high day close for the year, which still stands, okay, from back in January on the 25th, to me, that would risk a larger correction in sterling before moving higher again. You got a momentum trigger on the daily chart you got to keep an eye on as well. Was that my favorite scenario? No. Pull back right back into that level is where I would have liked to see this hold if we were going to have further legs on this immediate stretch. But sterling's going to do what sterling's going to do. Here's what it looks like on the intraday chart, and this is how I would attack this at this point. I think it would be worth a fade opportunity if you get one last downside stretch towards 40.18 to fade on a long position to play the upside. But, putting things objectively here, you broke the weekly open and the initial weekly lows. So the move here takes you into 40.84, and that was sort of a level that we were looking to hold as support. Here's the update for sterling from earlier in the week. Okay, so the upside stretch, obviously last week, the 40.88 level, the level I was talking about, the 40.84, 40.88 is the push higher. That's this pivot right here. But, the break above that obviously shifted the focus higher. Once we got above that high day close at 41.34, that's what really gave us the fuel, the conviction to continue targeting higher, looking for 42.10, looking for 42.60. 42.10 obviously got clipped, pushing higher, turned right ahead of 42.60, and now we're back into that 40.88, 40.84 zone right here. We're right back here again. So, it's an outside day reversal off resistance, or off the highs. I shouldn't say resistance. I'd be concerned again, guys, that this is just a washout. You move a little bit lower, clear out some of those weak hands, then you start to move higher. All things held constant, the weekly chart keeps the focus higher. But It's sterling, and it's going to do these turns right ahead of resistance, breaks of resistance, pullback. As long as we stay above 40.18, I think if we get a stretch down there, it might be worth it on a stretch just to try to push the long side. But we'd have to see, again, some near-term price action start to correct. So you think it might move lower, as Ruth is asking? Yeah, objectively, Ruth, I think the correction, now that you got through the weekly open, it has that potential to move lower. Now, look, I could be completely wrong. If we make it through the weekly open again and we close above northbound of 41.46, basically where we opened the week right here, I would at that point go a little bit more neutral to bullish. I'd be tempting the long side scalps on the intraday basis. But on a move like this, I can't just try to fade it right here. Because if we get that last slam higher and the dollar could push this down into that support target, I think that would give you a better entry. But very precarious here in sterling. Not something I'm necessarily really interested in getting involved in right now. And the turn here has me looking to play what's another pair that I could approach if the pound is going to come off, right? Well, we talked about dollar CAD earlier in the week. This is the dollar CAD setup. We're still bearish dollar CAD, even if it rips towards 29.70, 29.77. This would be the area of which we'd love to fade. Get a short entry if we get a spike into that. But if we break lower from here, you're right on down to the lower parallel. You got 26.85, 27 as its initial targets. So you're still 160 pips away from that. So if we get that CAD strength materializing, obviously with what the pound is doing, here's pound CAD. And I highlighted this yesterday, but I just wanted to kind of give you the larger chart because we have to look for a near-term setup, and it just wasn't there yesterday. But here it is, 183.54, huge level, multiple confluence region of resistance. You have basic channel resistance. This is a parallel of basic support. You have the 50% retracement of the entire decline off the 2015 highs. So a 3-year range. And you have the 50 line for the current operative slope we've been in off that low. Boom, boom, boom. Median line break, acceleration, 50 line confluence. Okay. The concern that you have, and I always tell you guys this, you never really want to try to get aggressive trying to call or fade a move as markets are in overbought condition, right? Because it can stay in this condition for an indefinite time period. And certainly the entire time it's in overbought, the market has the propensity to move higher. It's the break and recovery back below 70 that would mark the beginning of something a little bit larger. So while up here, always be cautious. Obviously, it's looking at the 70 level now. Let's see if we can make it through. But initial targets just on a soft level, 180.30, okay, or abouts would be the 200-week moving average. And then this is going to be your same key critical region of support, former resistance. Okay. Daily chart also highlighted that same type of resistance confluence region. In fact, on the daily chart, you even have the 100% extension of this advance from last year's late low. Came in at 83.87, and again, that was a perfect tag with both of those technical features. So really nice reversal from a level standpoint. From a daily chart as well, we are now well below 70 after breaking from overbought condition. And the risk here is lower. We're just looking for some clarity, some structure, okay, to the downside slope. I was messing around with this yesterday, but we just didn't have enough price action yet. I was looking at something possibly like this. Actually, that's the 50 might be decently clean on this one. There's a 50 right there. See if this pans out later today. And this is the 2018 range retracement. Not bad. Okay. And the high day close. Okay, it could be a raised ceiling type of exhaustion pullback. That would actually even make the case stronger. Okay, areas of interest for the pullback as far as support targets on the way down. Bearish invalidation as far as what would turn us back on the bullish side would be a break above the high day close. It's actually a decent setup. And it's actually a decent setup. Where's the 618 come in? Yeah, you don't need that. You got the Friday high as a near-term resistance target as well. Saw a decent pivot on the breakthrough on the way here. Hesitation, then break, seeing acceleration, but it converges on the 50 line here. Sort of initial resistance if we do rebound from here. Ultimately, I do like this lower. It's just pick and choosing your entry. Yesterday, as I said, you hadn't really had anything clean on the daily price action yet to really warrant trying to fade it. And as I said, ideal scenario would be for like one more possible exhaustion play higher before the turn. So at the end of the day, we broke through the weekly opening, we broke through the initial weekly opening range lows. Here's last week's Friday low, right? And then slope support. Near term, see a move into 81.05, basically the 81 handle. And 180.25 would be next downside targets there. Near term resistance, bearish invalidation. Make sense? See how that pans out today. Any questions on pound CAD? Okay, that is 6.7 on the session. Dollar CAD and dollar yen. So, dollar CAD. We went over this briefly, but let me just touch base on it again. I think this one's still pretty clean from the daily chart, from the weekly chart. You're just basically coming into monthly open resistance, monthly open support, excuse me. So it might warrant some little bit of a hesitation here, but remember the broader picture here. Divergence into the monthly high, into a major critical area of resistance on all three different time frames. Here's the weekly chart also coming into that confluence region. So look, the emphasis right now is still on the break of 28.20 or below. 28.20 being not only the monthly open, but you also have the monthly opening range lows right at the 28 handle. Slope, okay, longer term 2012 slope line. And obviously on the weekly charts, you have the 52-week moving average. Is that what that is? Yeah, 52-week moving average right there as well. So nice reversal off of a sweet resistance region, but that pullback's back on support. Remember, ultimately, we need to see it break below this region to mark resumption. This thing has been in a broad downtrend ever since the highs that we made in 2015, early 2016, and certainly, this is a make or break level we've been talking about for a while. So in order for us to validate that a more significant high is in place, we need to start breaking some support zones. Dollar CAD, okay, you have a clear-cut level of what to watch. You need to see that break below 28. 27.90 would give you the confirmation for the resumption lower. Near term, intraday, spike towards 29.70 would be a beautiful entry if we get it. The fact that you made this play an overnight trade has me pretty comfortable trying to trade against at least the weekly highs. Downside targets 27.90. Obviously, like I said earlier, 27.12, just above the 27 handle as the lower parallel. But basic trendline support, you know what I mean? Break could see a test of resistance that would still take you 29.70. But we'll have to see if we get that play higher. Still looking for short exposure here. Dollar yen, last but not least. Here's the abomination for you to close out the session. It's at near-term resistance by my standards. Okay, we talked about this yesterday. We completed a perfect 100% extension from the decline off the highs that we made in late February. Literally, that's exactly where we returned. You had lower slope in there as well. Here's the rebound, break of the initial sort of range highs. That's the Friday swing high. And here we are. Where's our last dollar yen update? was right here. Okay, we talked about that support structure. Bearish invalidation basically is 105.81. We're there right now. So if we make it through 105.81, guys, on the upside, game over as far as the near-term short bias, I guess. You know what I mean? This is what needs to hold if we're going to move lower in dollar yen. This is what needs to hold. Really clean consolidation. The break to the downside would have a measured move way lower from here. I mean, the measured move on such a play, just for sort of to play this a little bit more objectively, would be like 102.80s. Okay, that's just trying to be sort of, if we just take a basic triangle breakdown range, that would be your measured objective rate, was down to 102.78. Now, we wouldn't really necessarily, try to target that, because on the weekly charts it's very clear that the big level of support is right around 103.40, 103. That's the 100% extension from the broader decline off that late 2016 move. You have a 786 retracement off the 2016 lows, and you have clear-cut, well-identified slope. All converge right there. So trading at these extreme levels as markets have really pushed the momentum signature, turning a little bit. This is what has me on edge, guys, on some of the dollar crosses. You've seen that I focused a little bit more on some of the extraneous exotic crosses, just because I think the dollar is sort of doing its own thing with each play here. So for me, the yen story, I guess, I'd still like to play through Aussie yen if this is going to move higher. The dollar story, I would still love to see dollar CAD lower. But as far as dollar yen is concerned, this is my line in the sand. I want to see resistance hold right here. Now, momentum has made it through 60, so that kind of pushes away the broader bearish momentum signature. But from a price standpoint, this is it. If we break through 105.80, there's probably going to be a larger rally that we need to be mindful of in dollar yen. Eman says, Michael, when I'm in a near, no, I missed that one. I want to take my dollar yen as a swing trade. What is the ideal stop for that type of trade, please? If I want to take my dollar yen as a swing trade. So remind me again, are you in it already? Oh, here we are. Yeah, there's the comment I was looking for. By mistake, I have a short dollar yen trade at 105.30. 105.30. You're short from 105.30. So, Eman, again, objectively, I would have a stop against basically the high that you just made. Because for me, this is my line in the sand, right? If it breaks through 105.90, 105.88, this pivot in price, a basic 38.2 of just this near-term decline, but again, also basic trendline support, term resistance. If we get through this, it could see 106.60. If you're okay sitting in a trade for that long underwater, that's your perspective. Personally, I would want to dip out if 105.90 gets overtaken. Okay. Let's see what the near-term momentum sig looks like. Okay, so if you go really near term on this one, Eman, it actually further reinforces that you should be probably looking for pretty strong resistance right here. See that? It's the 50 line. Decent resistance, decent resistance. There's a check of the median line again. If that breaks down, 105.50, the lower parallel, pretty much with time, depending on where we are in time, will coincide with that swing low that we made in Asia. Okay, so look for like 105.44. Now, that would still keep you underwater with your entry at 105.30, but that would be the level you need to see break. If you see some sort of strong corrective bounce from that level, a hold at 40 momentum, it might be worth kind of eating the loss at that point. But certainly where we turn from is where I'd have my stop against at this point. If we break through this, I probably want to duck out of that position. Does that help you, man? Not to mention you've been getting ongoing divergence all up into these highs. So, you know, a good area to start looking for that turn to start to materialize. Amen says, yep, thanks. Kelly says, very good advice to the man. Better to save capital and trade another day. If it breaks your stop loss, it is what it is. I call it a trade. Yeah, 100%. And guys, you know, I don't need to say this beginner stuff here. You guys know the deal. We practice risk management. And that's why every trade we take is not just the directional bias on whether we think it's going up or down. It's, is there a position there? Is there a trade? A respectable, you know, well ascertained, well defined stop, a level of which you're putting your risk against. So, with the same respect for guys who are looking for new entry, you know, if you get a decent bounce and some sort of momentum pullback, some sort of exhaustion right ahead, an entry, a stop against that high might be a decent near-term play to the downside. I would just caution you in that it's dollar yen. So expect the unexpected. Expect to get you know, pooped on every now and then. It's just what dollar yen does. Okay. Questions, comments, concerns on any of the setups we covered so far today? Or if you have any other questions before we wrap up the session. That was number 9. Really quick, Bitcoin. You know, I know that we don't cover it here in the webinars too often, guys, because I haven't really gotten much feedback from you that you are actually trading this. So I don't know if SB clients are really huge on Bitcoin trading. I just want to continue to highlight this key support range that we've been talking about for 2 months. It's still in play. Okay, the yearly low day close, 77.37. That's sort of the line in the sand of where this thing is holding still. Key resistance 9,222. I just want to bring this to your attention. You had Tom Lee again on CNBC this morning, you know, calling for 20,000 on Bitcoin. Yeah, okay, cool. First things first. Let's see a break of this key near-term range. Yeah, I still think the emphasis or the power or the momentum is on the side of the bears on this one. So use some caution there if you're holding it. Euro Aussie, if you have time, says Pooja. Certainly have time for you. Here's Euro Aussie. Oh, this is the wrong charts. Sorry about that. Euro Aus. Okay, let's clean this up a bit, shall we? So the thing with Euro Aussie is this, you know, this was a huge region. And I have some discrepancies here that I'm trying to reconcile in my own head to try to get my head around this one. So remember, Pooja, we were talking about this big resistance region, and for a while we wanted to play the pullback. Then it started to creep higher, right? The weekly chart has me concerned in that it looks like price is breaking long-term resistance, but momentum is getting even stronger on the divergence, right? Every subsequent high that we've made in price has been met with a lower to equal high in momentum. We got that trigger break towards the end of last year, and even though we've made new highs since, that same trigger support has been resistance, So the longer term picture, it looks a little tired, right? Pooja, deeper on the near term charts, I still think this thing could exhaust. You know what I mean? I think it could correct lower. I think short on a break and retest of 60. Yeah, that's how I would play it, Pooja. Yeah, we're on the same page. That's how I would play. 59.50 is kind of even the better zone, Pooja, for the daily charts, for the pivot right here. If we break below this and come back and test it. But yeah, you have 60.50. I have 60.76. We haven't been able to close above that. That is just a former swing high from the initial opening range we made in 2016. But it also converges right in that upper parallel. So yeah, I mean, if anything, put a gun to my head, I'd want to be short. Do I want to be short Euro and long Aussie? That's not a bad idea in my opinion for the near term. You know, I think if Euro holds the lows that we talked about, it might not be the best play. But for Aussie, you know, we haven't talked about Aussie, guys, and the reason is I am just looking for some sort of settling. There's nothing for me to do here on Aussie. My favorite trade of all the currencies over the years, I've told you this a million times, but there's just nothing to do here, guys. It's either a long off 76.30, 76.40, this region here, even 76.10 on a stretch, or a break and move through 77.60 to get the conviction reversal. There's nothing to do until those levels come and play. Even on the intraday, for an intraday guy like me, guys, there's nothing here that draws my attention. So the break below on Aussie dollar, the break below, you know, the big support confluence we were watching here, it's either a long off here or a break back above this to get the conviction reversal. Till that happens, there's nothing for me in Aussie. So that's my concern with Euro Oz, Pooja. Does that make sense? Like, I would like to be long Aussie, sure. So the Euro Oz short sounds kind of like it makes sense. But for Aussie dollar, I still think you can get that drop into 76.30. And if you do, you know, Euro Aussie can rip face a little bit more before you start to turn over. So I think the game plan that you're talking about is sort of the same mindset I'm walking in with, in that, you know, if we get, let me get back to the chart. If we get, you know, sort of a steeper pullback and retest maybe of that 60.50. I mean, this whole region is kind of littered. I had 60.17 as the 100% extension, but that caught resistance just for 2 days before breaking higher. This is the pivot zone in general. So yeah, 60 break, test as resistance and move lower would be the play for this one. Let me just look at the near-term chart real quick again. Now again, this is just a drill. This is just a drill. You know, don't try this at home. But just to see if this high is held, okay? If that high is respected in price. Just want to see what this would look like. Okay, could be a play. Could be a play. Revisit this pitchfork later in the session, specifically if we break lower. I'd be comfortable working with that as the sort of initial slope on the near-term pullback. But this is a big assumption that this is a high. We have no way of telling. Remember, if this high keeps going, guys, there's essentially nothing. Look for soft targets at those former swing highs. But this was the last sort of big pivot in price. Does that help, Pooja? Interesting spot here. Okay, wow, I'm way over on time. Guys, best of luck trading today. Keep, you know, your leverage light. Keep the powder dry a little bit. We've got some event risk filtering in towards the end of the week, but these levels and these pretty big reversals, guys, are a cause for pause. You know what I mean? So take your time with this. I think we get further clarity as we get towards the weekly close. Keep in mind, it is also the monthly close that we're heading into. So there's going to be plenty of opportunity on the horizon. I'm certain of it. Till then, best of luck trading, and I'll see you guys tomorrow. Dagan, Jaya, Pooja, amen, as always. Cheers, guys. I'll see you tomorrow.